What's going on, guys? So I want to go over here how you can use basically all time frames to your advantage. I want to go over here also as well as an entry that we took on a Friday, right? That was pretty late at night, I think in the afternoon session, right before the market closed. But it was interesting to see just how the market kind of reprices and tries to rebound in certain levels. So if you take a look here and you just take a look at what S&P is actually doing or what it did through Friday. And it's kind of downtrend that we had. We're obviously in bearish order flow, but just take a look at this, right? We have this level here or this gap that price is trying to reprice to, because this is not a gap that's really going to be significant, right? It's going to want to reprice to that level, right? So you guys really take a look here at what happened here, right? Because we kind of had an interesting week. We kind of had that CPI that affected the market as a whole. Let's take a look at how that actually acted up there, right? On Wednesday we had this. So this gap is not an opening gap. Sunday opening gaps are more important than gaps that we have in the middle of the week. Most of these gaps, when we have them happening in the current week after the opening gap, they will most likely get repriced to, and these gaps are going to be more significant. So opening gaps are way more significant than what gaps are. So these gaps, again, they're going to majority of the time be repriced. So think about it kind of as an eye or as a magnet, whatever it is that you want to see that. So taking a look at this gap, I have what price dropped down here. I was expecting price to come back down and reprice towards this area all along. And what you can see here is that price is not really giving you any type of entry model. What price is actually doing here is it drops down and it has a little bit of a sweep of liquidity down here. So here already start getting a hint that price here is going to want to start going higher here, right? And why is that? Because you can see how here we start making these equal highs where retail traders could be trying now to try to short this. And it's also a mixture of combination when you have both ends. When you have retail trying to short, and when you also have SMC trying to short. Why would SMC be trying to short here? Because what do we have here? We have equal highs, and right above these equal highs, what do we have to the left? We have an FVG. So take a look at this FVG here. So whenever you have that type of FVG here, what do you guys think SMC traders are going to want to be doing here? They're going to want to be trying to short here. What we understand as traders is that we can use that to our advantage if we understand that once this bearish buying pool is now going to get repriced to a bullish buying pool. So you can use this one of two ways. Once this breaks and you see this price go higher, well, what do you have here? You now have a low point that let's say is high point, right? And if you are to put out your fibs here, you're looking for a discount and an FVG here. So if you can see right here, what do we have? An FVG. So if you wanted to, the riskier entry would be your entry right here, and you would have your stops right below the candle made FVG, and you can be targeting again the highs right there on S05 to 1. Now me, I'm a little bit more of a conservative trader, so I wouldn't take that. I would drop down to the M1 and I'll have my eyes focused on this is the trade that we took right here. I would have my eyes focused on that first mitigation. And if you guys take a look at what actually happened here, what does price do? It mitigates down this OB right here that also has behind equal lows right here that get grabbed right there. So we have those equal lows that get grabbed. Here's a nice model you could follow through. And through there, what does it do? It makes a higher high that breaks at a significant structure right here. So once we break that, we also leave behind what? Equal highs right there. And what do we have behind down here? Take a look at what's right there. We have a nice and easy, pretty simple FVG. So all you do here, when you're following through with that model, and you understand these kind of concepts that we have heading above with premium discounts, FVGs being broken, and that repricing that we want to reprice to that opening gap, not the opening gap, that gap that we left behind the weekend, not the weekend, sorry, that gap that we left behind in the middle of the week, then all you do here is put your longs to this FVG, put your shorts above the candles that made the FVG, and again, target the highs up there. And that would have been a nice little 4.6 to 1 if you would have taken that. Understanding just again, going through all the time frames, going down to the smallest one where you can have your model, whatever model is that you trade from, understanding it to a whole. So I hope you guys learned a little about that quick video on that trade that was taken very late into the session, but just understanding that price wants to reprice towards that gap that we have left behind. And just looking at FVGs again as selling pools, not being formed into buying pools, right? So I'll see you guys in the next video. Don't overtrade, don't leverage, and peace, right?